It is my pleasure to officially welcome everyone who's here to this very important conversation with Syama Bunton about building values-aligned wealth as an investor. Now, I love this question, Syama, that you left us with. If 99% of startups fail, which we know they do, and no corporate job is going to make you rich, which is also true, for the vast majority of cases, then how do you build wealth? How do we do it? And this is such an important question. This is top of mind, I'm sure, for everyone in the Fourth Effect. And I can't wait to hear how you, Syama, are going to answer this very important question. Syama is going to speak about how we determine our values, what's important to us, understanding what's available to us in wealth creation, when it comes to creating momentum and engagement in our financial lives, and of course, changing the world through our capital, which is another really important thing. So before we dive in, I turn over the floor to you, Syama. Just a very brief word about the Fourth Effect. For those of you who are not already a part of the Fourth Effect, we are LinkedIn meets Bumble for boards and investing. This is a networking and matchmaking site helping pre-seed through Series A startups primarily understand advisory boards, governing boards, how those boards help you fundraise, hit KPIs, and scale. And we are also helping a diverse group of executives, experts, and funders understand startup boards and how angel and LP investing can be a powerful on-ramp to a for-profit board career. So we will drop some links in the chat. We always do. We have platform tours. We have weekly brainstorming sessions for members. If you're a new member and you haven't done this, we really encourage you to pop in any Friday between 12 p.m. and 1 p.m. You have me, you have Kat, you have our full attention, our head of product. We are there to make sure that you are finding the value that you are looking to find in the Fourth Effect platform and community. So please take advantage of that. Also, our annual summit is coming up next Tuesday. We're thinking about it a lot. It's in New York City. So for anyone on this call who's in the New York area, we'll be sharing a link in the chat to RSVP for the summit as well. We would love to see you in person on Tuesday. There might be some other links that we share to follow us on LinkedIn, post about us. If you are a new member, it's really helpful. So just wanted to say that, but now I want to get to the point of today, because that is why we are all assembled here. I could not be more excited to introduce you, Syama. Syama is part of the Fourth Effect, is an equity member in the Fourth Effect, is a wonderful human being, is also a leadership and strategy executive to visionary founders and to their teams. Syama, I know you've been an operator, an investor, an advisor, a trusted consultant to startups that are looking to launch and scale, which is what we talk about all the time. Known as Big Delta, Syama launched Rendell Co. and grew it to 3 million in 6 months. That is an unbelievable achievement. Doubled the volume of Gucci outlets from 50 million to 100 million in 2 years, and has been scaling up teams to operational efficiency and profit for the last 15 years. That's really incredible. Syama has received a number of awards, so I won't list them all out. There's so many. She also has been, featured. She's a featured speaker, a thought leader. I think you did TEDx LA, and you are regularly quoted in NPR and reputable press. So that's all very exciting, and I just wanted to, give you your due in introducing you before I turn over the floor to you to speak about yourself in your own words, and also to answer this burning question that you have left us all with. So
Thanks.
Take it over.
Thank you. What I think is so interesting about this particular topic is that money is something that escapes nobody in this lifetime. It is one of those things that I think it's around us when we are born. We don't understand the money stories around us, and then it has significant impacts on how we choose to make decisions in our lives and our risk tolerance and how we choose to create in the world. And many entrepreneurs create because they had nothing to lose, and they're sort of, this is it. This is my one chance at sort of building or creating generational wealth. Other entrepreneurs are driven by a deep sense of, this thing needs to exist. And I feel like my time, energy, and resources need to go into answering this particular calling, right? Or this particular mission. And so there's a whole variety of reasons of why people enter into entrepreneurship, but it's certainly not for the intention of going broke. And it's not for the intention of leaving whatever it is that you've created and asking yourself, well, shit, like, what do I do now? How do I sort of manage my life after the fact? And so, one of the things that I think is so valuable for today's conversation is to really ask ourselves, I think, a super important question, which is, how many people have had a linear journey in building their business? Chances are zero. And then the second question is, how many of you is your business your primary investment, right? And how does that feel? How does it feel to know that your business is your primary investment? And I really want to let those things land because I think that there are these moments when we're running so fast and we don't stop to realize, like, okay, not only do I understand this from a day-to-day paying my bills perspective, that this is my number one investment, but also like everything that I'm doing is relying on this particular thing to work. And so before we jump into slides, I want to do a little bit of a personal share, which is, my gosh, I've had my business now scaling retail going on 12 years. And it took me about 5 years into the business when I finally realized that my company was never going to scale to the degree that I wanted it to scale. Yes, it was a cash flowing business. Yes, I was making money in the business. I was providing me, I could hire people. I had a small team. I, was able to really sustain a lifestyle, but it wasn't going to have this big exit. And I really needed to start to figure out, okay, well, what does that mean to me? Does it mean that the business is bad? No, the business is great. It's affording me so many incredible opportunities. I'm making money, the business is profitable, but what do I need to do? And so it was at that time in 2017 that I made my very first investment into a private company, and it was on the secondaries market. And I'll go a little bit further and later about what that actually means. But basically, I was buying employee shares of an existing company that was privately held. And it was a really small first investment, and it started to help me feel like, okay, I may not have a business that I own that is going to hit some big exit value that I'm going to retire off of. But I actually have an opportunity right now to take some resources that I'm earning from this business and be really strategic about how much is going back into the business and how much am I starting to put into other different areas that are ultimately going to help me grow wealth as I'm sort of working in this company or until I figure out the next thing that I think might give me an exit, right? So that was really one of the first moments that I sort of had to stop and take a very realistic point of view, right? And that really was, I'm looking out for myself in the long run. My business may or may not exist, but I know that at the end of the day, I will. So I need to make sure that I'm okay. And then also starting that process of understanding what are some of the things that are available, right? And so what are some of the things that I need to sort of start to tap into? So that is a bit of a personal share on how this topic is so important and valuable at every step of the journey. I'm going to go ahead and share my screen and start to walk through some of the areas and thought processes that I think are really important to consider as we start to build sort of our strategy here. Because ultimately, at the end of the day, money becomes a very personal topic. And it also becomes something that we can do something about, unlike other areas where it feels like we have very little control. This is an area where we actually have quite a bit of control. All right, let me pop this open to my beautiful full screen. Boom, here we go. One of the most fun things about doing this work today is I get to have really beautiful new templates of PowerPoints that look really gorgeous that that in my previous lifetimes were not as so guys, building wealth as an entrepreneur. How fabulous. Okay. So, Brain, you gave an incredible introduction to myself. I think one of the things that I think is so important here to caveat with the opening of this conversation is that I'm not a financial advisor, I'm not a lawyer, I'm not a tax accountant. I am a passionate woman who believes that if we don't understand how we can best earn capital, make money, invest our money, become rich, that we won't have a fighting chance at really changing the world in the ways that we want. And so, as we look at sort of the vision of the world that we want to create, having a lot of capital is one of the most important things that we can do. Now, that might hit people in different spots as far as what their own personal money stories are and how they feel about money. But at the end of the day, through both our investments and our purchasing power, we can actually make a tremendous amount of change in the world. So, building wealth. Why is this important? Well, your startup might grow fast, slow, have a liquidity event, or it might fail. We don't actually know the answer to that. But we do know is that it'll likely not be forever. You will likely not be the owner of your company forever. You might be, but likely not. A lot of founders look to sort of sell off their businesses. You might find yourself in a position where you have operating partners who step in and you're really like, hands off the company and you're an owner, but you're not in the company anymore. Chances are you are not going to be in this business in the same way forever. And so, this opportunity to really think about building wealth in the beginning before you launch, as you're building your business, and then ultimately seeing it through to sort of what the ideal exit looks like, it is an important thing to consider. So, a few things that I think are really interesting. If you're investing in your primary business, and that is really what you're looking at, there are a few different strategies and ways that we can look at how we can make this a smart investment, right? A lot of folks don't sit down when they start their first businesses and say, okay, I'm going to write a real business plan. They're like, I have an idea. I'm going to test it out. I'm going to start figuring out what this looks like. And in some cases, instead of it growing like a spider web that is really beautiful and linear and has patterns in it and kind of starts from the nucleus and scales outwards, it ends up looking a little bit more like a funky constellation, right? You've got this point here, this point there, and things are sort of bopping around in a way that looks a little bit less linear. And so, in the beginning stages of sort of business ideation and how you're looking at these early years. And even as you're looking at strategic planning over time, it's really important to obviously invest in the right partners for your company and building out operations. But also, what I think is most important here is looking at whether or not you're chasing good money after bad. As an entrepreneur, it's important to know what is it that I'm going to look out here for in terms of KPIs and metrics? How do I know I'm tracking properly? And knowing that this is not only maybe a passion, so something emotional, but also something intellectual, right? This business is supposed to be an investment. And that means that if you're looking at closing down your business, or if there does need to be an opportunity here to, sell it off or different ways of exiting, look at really tax efficient ways. Now, these are things that no one wants to talk about when they're in the early days, right? Like, how does the life cycle of business look? But it's really important to understand that you, as an individual, while your business is a part of you, right? You are ultimately possibly going to have many businesses, right? And so if you look at sort of the tax strategies, right, and creative ways of managing being an owner of a business, you'll find that there are more opportunities other than, let's say, some tax write-offs every year, right? So start to build those relationships and understand the different ways in which your business can support you, both as it scales and becomes more profitable, but also how you might be able to take benefit from that if it is something that does need to wind down. The next thing is, excuse me, raising capital or debt strategically for your business. Most people, I'd say most women in my experience, have been really adverse of debt, right? Really debt adverse business leaders. And that is often great from a profitability standpoint and being able to feel really secure and confident about where the business is today. But as far as scale and growth, right? The right combination of, let's say, institutional or outside investor capital, as well as sort of raising debt, are two different instruments that I think are really important to look at when you're investing in your company, right? It's not uncommon to say, okay, I'm going to, pay for this debt with this credit card, but is the credit card really the right way to sort of make those advanced purchases, right? Is it a line of credit? Are there other ways in which you can look more strategically about your growth and operations and treat it like an investment, right? Leveraging the tools sort of around you. The next thing here is obviously, opening your retirement account. So a lot of startups do not start to do this very early. I think with the tools and resources that are available to us, companies like Guideline, make it so easy, right, to do all your payroll, and then they integrate so easily into, or make it easy to do 401ks, and they integrate so easily into companies like Gusto that allow you to do your payroll. And so when you're starting to think about what a 401k might look like internally for your team, remember that it doesn't cost much to set that up. On a monthly basis per person, you might be paying $89, for yourself each month to have the account, plus maybe another $20 per head of people on your team. And so when it comes to sort of the advantages or incentives of opening up 401ks internally within your company, not only is that great because you get to now invest in yourself from a tax-free standpoint, but you also get to offer a huge upside that most startups don't offer to their early employees, right? A lot of them are saying, hey, I'll give you equity, I'll give you this and that, but they're not saying, actually, let me help you really invest in your future. So that is something that I think really sets you apart as a business leader, right? Sort of how you're setting up your internal systems for your teams. And then obviously the SEP IRA, I think, is a great option for those who are independent. They don't plan to offer it within their company, but it's something that they're going to offer and start to invest in yourself, right? And these are, again, things that you can start almost at any time of the life cycle of your startup. And what's powerful about that as the owner of the company is you get an opportunity to max yourself out, right? So you get to put in as much as you want, and then the company gets to match you. And again, the benefits of this are certainly around the tax advantages. Again, not a tax accountant, but have been the beneficiary of great tax advice. The last thing I want to say here in terms of investing in your primary business is about getting the bench ready. So when I talk about the bench, I mean your lawyer, your tax accountant, your bookkeeper. You don't need to be paying all these people every month. Your tax accountant comes around once a year. Your bookkeeper is someone you're going to speak to probably once a month, and your lawyer occasionally. But it's really important to have the bench ready because as you're making key decisions in terms of what's happening in the business, right? What are tax advantages in the business? What are some things that you need to look at strategically from, let's say, IP protection, whatever it is, right? If you're really investing in your company, you will be getting the bench ready so that your company can handle any of the issues that might come up along the way. And trust me, there are issues that come up along the way. And the last thing you want to be in is a position to say, I need a better, tax accountant. Where do I find this person? My taxes are due in 2 weeks. That would be not being a great steward of the business, right? So we want to talk about stewardship of your company if it is your primary asset. Now, when it comes to investing outside of your business, I think this becomes really exciting. So, you have so many options as an individual person to be able to invest outside your primary company. And some of these things are more available to all, and some of them are available to accredited investors. One of the things that I think is so powerful here is that most of you guys don't know that you are accredited investors. And so what's exciting is that the opportunities to be able to invest in other asset classes becomes a really interesting thing to explore. And so, as we're thinking about the different ways to invest outside your business, as a accredited investor, and I'll start there first, that is earning $200,000 a year solo, 300,000 joint, or having $1 million in net assets. What's so interesting is I think is living in New York, you could be, earning $200,000 a year or 300,000 in a joint household and still feel broke, you know? So this is definitely not a do you feel broke metric. It's more what is available to you as an investment class. But I think it's important to realize that, this threshold, um, it's personal, right? This might seem high to others, it might seem low to others, but what's important to know here is that the regulatory rules around investing and being an accredited investor and being able to get into these opportunities is relatively new. Meaning 30 years ago, you didn't have the opportunity through these much lower thresholds to get into these deals that might have an opportunity to really move the needle on your wealth building. I only knew when I was, growing up that there were only a couple ways to make money. You were an entrepreneur, but again, didn't really know the riskiness around that. You had a corporate job, you bought your house, and maybe you invested in the stock market. But some of these other things did not become available to me until I stopped and really started digging into the weeds of how does someone really build wealth here. And so let's unpack some of these different opportunities that I think are really just gems. So the first here is investing in the secondary markets. Now, as I opened up today's conversation, the secondary market is really around investing in privately held companies where you get to buy the employee shares. I had the opportunity to buy shares of Slack before it IPO'd or the Honest Company before the IPO'd. Not to say that both of those did well. Slack doubled and I lost half my money in Honest Company. So understand risk tolerance, even if a company is close to an IPO or an exit, doesn't necessarily mean that it's going to do well, right? You're kind of going in at one price and you have to say, well, does the public market really value this asset the same way that I did as a private investor, as the private markets do? And sometimes that's a no. And there are companies like Equity Zen and Forge that do a great job in sort of, dotting the lines together with the secondary markets. The next thing here are, venture capital funds. And I want to caveat all of this by saying investing in these asset classes doesn't mean you're putting down $100,000. In many cases, a lot of these opportunities can be available for you for minimums around, $1,500 or $5,000, right? Or $10,000. So really sort of thinking about demystifying what it means to be an investor, I think is also important because sometimes we think that investing into something means that we have to already have $10 million and then we have to put down $1 million into something. That's not the case. So investing in secondary markets, venture capital funds, right? So some of these funds these days are really looking to diversify who their limited partners are. And that means that they're offering lower check sizes to be able to get into their funds. Low check sizes as of $10,000 to get into a fund that might normally be raising $500,000 checks. What I love about venture capital funds is that you get a chance to diversify what you're investing in. And that timeline horizon, unlike secondary markets, which is usually shorter time to exit, I'd say about 3 to 5 years, venture capital funds are usually about 7 to 10 years, right? So looking at sort of your risk tolerance and your risk profiling is really important. If you're not interested in diversifying through a fund, angel investing can be really fun. And getting onto the cap table of a business when you're angel investing could be anywhere from 10,000 to get you on the cap table, or maybe it's 100,000. And that's really dependent on the founder. But the thing we don't often talk about enough are founders investing in founders. I can't tell you guys just how many meetings I've been to and events I've been to where a lot of founders are raising their hands and they're saying, I'm raising money for my business and I'm also investing in these other companies because I realize that I need to spread and hedge out my risk here. And so, this concept of founders investing in founders, I think, is one that really needs to be evangelized more deeply. Really, because I think that there's a huge opportunity for all boats to rise, and if someone has an opportunity to really spearhead spearhead this, I think is great because founders understand sort of what someone else is going through, right? So founders investing in founders through angel investing. And then obviously we're all here pretty familiar with what the special purpose vehicle here is, but SPVs, I think, are another very easy way if your heart isn't attached to being on the cap table to be able to take a small amount of capital and invest it into a company. One of the first syndicates that I joined that had that was all SPVs was the Hustle Fund, and they have this group called the Angel Squad, and it was an entire learning process. You got to be with a cohort, you got a chance to meet with founders, learn how to do diligence. But the deal sizes to invest in a company was only $1,000. You could invest $1,000 and up. And so this idea of sort of looking at SPVs as an opportunity to really put small amounts of money into different companies and take the opportunity to roll up your sleeves is also fascinating, because imagine as a founder the opportunity to see other people's pitch decks, other people's P&Ls, other people's operating, what their struggles are, building community. So many things that you can learn by making a very small investment into another company and sort of getting involved in how they are building things, right? Talk about a win-win. Also in terms of potential business synergies. And then there are other alternatives that I love to talk about. So some of my favorites are obviously, Broadway, which has been a recent favorite and new one of mine, because I never knew that angel investing or investing could be so fun. But being able to sort of see your resources go into assets or asset classes that are fun and exciting and give you an opportunity to still make money. It's still high risk. I'd say Broadway is probably on par with any of the other ones that I've mentioned in terms of the riskiness of the asset. But also, unlike, let's say, a SaaS company where you know that they're doing really well because you see the metrics and maybe some billboards, Broadway is really fun because it's experiential. And so, some of the things I think is important to think about are, what are the ways in which you can use your capital to be able to make more, but also to have a good time. Some of my other favorites here in investing outside of your primary business also include investing in cash flowing businesses. One of the things we don't talk about enough is that today most of us are here, building businesses to scale, right? We look at like hockey stick growth. We look at sort of like what is the big exit or the big thing here. But I have to tell you, companies that are doing plumbing, electricity, gardening, laundromats, the money is sexy there. It's not the first thing that we think about when it comes to, hey, I want to put my money into a company, I want to invest into something. But when you start to think about, oh, that local plumbing company that I know, they seem to be doing really well. I wonder what the opportunities might be like to invest in them, right? Because we can see that there's a rise in sort of the, not only lowered competition in the market because more of these companies are getting consolidated, but this one I seem to see the truck is driving all around the neighborhood. They must be really good, right? So what's sometimes interesting here is to think about that opportunities to invest aren't necessarily ones that have to just land at your doorstep. Opening up our minds and using our voices and saying, wow, I really love your business model, or I love what you're doing. I'd love to learn more about that. I'm over here building my business, but maybe instead of launching, you know, a SaaS company and then thinking about running your own laundromat, maybe you invest in another laundromat or go in on something with a few other people. So this idea of looking at diversifying the riskiness, right, and looking at sort of what your appetite is, I think is important. We'll get into some of the ways to do that. And then the last thing here in terms of investing in your primary business is also looking just at the public stock market. It's one of the more liquid ways in which I think we can invest. This year to date, I believe the S&P 500 was up 35%. Like, that's outrageous. When we think about the 10-year returns on the S&P, we think about like 10% or 11%, but 35% is a lot, right? When we start to ask ourselves, where do we put our money and where are the places in which we can see, again, diversified returns? The public stock market, I think, is one of those places that just continuously does well. Yes, there have been big dips and shifts, but the rebound, the history of the rebound, is very strong. Unlike the history of rebound romantic relationships, the history of the rebound of the stock market, I think, always yields pretty strong results. And the last thing I'll say here on this slide is, investing in some of these companies and even investing in the public stock market Many of these things you can invest in pre-tax and post-tax accounts, meaning, your 401k that you're sitting on or your Roth IRA is something that you can leverage to do strategic private market investing or even investing in the public markets. Like we have an opportunity here to leverage our resources to really be able to help us grow wealth. I believe it's Peter Thiel who has like billions of dollars stuck in a Roth IRA because he was able to invest so much of his assets from his retirement accounts into these other companies. And they've done so well. And now they're tax deferred, right? So now all of a sudden, all of the appreciation in his investments are going to be even more valuable because he's not taking taxes on them because of where they're sitting. So these are things again to sort of speak to with your tax accountant, your bookkeepers to make sure what makes sense for you. But all these things are available as we are also building our businesses. So then the big question comes up, which is, how do we decide what are the right opportunities? And I think this is one of the parts that gets to be the most, exciting. It also gets to be, I think, the area where we get to find our sea legs and maybe feel the most insecure around. And that is going from, I think I want to do this. Can I do this? How do I do it? How long does it take? What are sort of the mechanics around it? And so the first step in sort of how to develop this is really in the education perspective, which is we all together owe it to ourselves to spend time learning and talking and exposing ourselves to new opportunities. It can be so easy to have the blinders on and say, I'm doubling down on my business and this is the only thing that I'm looking at. But like I started the conversation, there are going to be times in your life where you may have a second business, a third business. You might have big dreams and visions of the world, and maybe this business you have today plays a big part or a small part. The point is that we don't actually know. And so, in lieu of not knowing, we have to educate ourselves so that we can feel secure and confident as far as the decisions that we're making in our personal lives and how we can balance that with the decisions we're making in our business lives. The next is risk assessment. So, evaluating your own risk tolerance from time to time. Where do you need resources to mature? This is important. That's a really fancy way of saying, when do you need the money? When do you actually need the cash to be able to do something with it? How much do you need to keep in more liquid accounts to feel safe? We don't often talk about our own personal needs of safety. I've spoken to people who are extremely wealthy who walk around with poverty consciousness because they feel like they need to have all the money in their bank account and they need to look at it often in order to feel secure. I know people who don't have much money at all who are like, hey, I'm like, feeling really abundant and I'm feeling like, everything I'm doing is it's gonna hit gold, and that's amazing, but your own needs are going to be really different. I guarantee that my risk tolerance and profile is gonna be very different from probably everyone else's, and a lot of that has to do with the third thing on here, which is unpacking and healing our money stories. This conversation really focused around different ways to look at building wealth, but us being able to understand our money stories helps us understand also what our values are. And when we think about the things that are important to us, being able to be self-reflective in the process of what does money mean to me? What is important to me? What are the things that I think I want to spend my time, energy, and money on? I know people who have companies that they are successful founder CEOs of, that the businesses are doing well, but they're no longer aligned with their values. So what do you do there? Well, you don't leave your company probably, if it's doing very well. It's a personal decision, but chances are you're going to look at creating impact in other ways, right? And so as we look at sort of what impact means to us as individuals, often that can be rooted in not only our money stories of how we were raised, but also in the ways in which we're looking at sort of exercising our current values. One of the things that I I hate the most is when people say, these are my values, and they're very aspirational, right? It's like, I want to be a good person. I want to, I believe in social justice, and it's all these things that sound good, right? But my question to everyone is, what is actually true to you? And when was the last time you sat down and looked at your whole calendar year of last year and say, where did I spend my time? Where did I spend my money? Who did I spend time with? What did I do? And really reverse engineering this question of your values, not from who do you wish you were, but more like, who are you really? And how do you start to really align the rest of your life with who you really are? And that I think starts to unlock a lot more opportunities because many of the things that I talked about, investing in a fund, investing in an SPV, all these different things, they are vehicles, right? But the vehicles need to be directed towards the businesses and the ideas by which your values correlate to. Right. So understanding the vehicles are important because for most of us, we don't know that those are available. But the lens to that is looking at what are the sorts of things that are important for us in the world. And look, financial security is an important thing for many of us, and that necessity of how much we need changes, right? So looking at the risk assessment is important. Exercising capital is a muscle, and we have to start with small reps. The very first time I ever wrote an angel check, it was terrifying. I was very excited, but I also had never departed with with money at that size and had no idea. I had nothing to sort of show for it. There wasn't a house to show for it. There wasn't a car. There wasn't item of clothing. And I really had to start exercising my muscle in order to be able to figure out for myself what does risk mean to me? What are the businesses I believe in? Who are the founders I believe in? And as a founder myself, right? Also looking and being able to validate my own founder journey through my participation in capital and investing in someone else's business. It's almost like it's very difficult to know what it's like to raise I mean, to invest in money if you've never done it before, right? To invest into another company. So it also gives you a really interesting perspective as a founder, which is, man, if I'm getting pitched to invest and I can see and understand how this operates, imagine just also like how much better it'll be for you when you're pitching for your business. So there's a great deal of information and mind share here. Okay. So the next thing here is there are a few different really awesome episodes of the podcast that I think are great from that building wealth through an entrepreneurial lens. Rebecca Minkoff on the show did a fantastic job of talking about how she's done very well with her real estate portfolio, something you wouldn't necessarily think about. She started off her company only making $27,000 a year, but really, despite, selling off different parts of the business or selling off the business, her real estate portfolio has been the thing that's been really consistent and steady and growing. These are things that you're not going to hear about in a founder session, right? About how to grow your business. This conversation is how do you grow your wealth, right? And that means your business right? It's got to be a total picture. The next one that I think is exciting is Nikeo Greco. So what I love about her background is that she sold her business, her first business, Nikeo, to Unilever. And most people think that the exit is the dream. But she then quickly realized that the exit was simply just giving her capital to start something new, that it wasn't the dream exit. And so I think it's important to also context and realize that how we look at the dream, right? I want to exit this business. What does the end, result of that transaction, what might that look like? And sort of thinking about how you're going to be able to leverage that into something else. And so for her in our conversation, she was telling me about how important it is for her to now structure her investments differently because she was so interested and eager in raising capital for her business that she did the dream, which is exit, but she didn't get the dream on her terms, right? She got the dream on someone else's terms. And so that yielded in less assets for her. The next one that I think is exciting is Amber Allen. So what I love about Amber's story is she talks about going from her corporate job to launching her business and really doubling down on her skill set. But the way that Amber is sort of approaching entrepreneurialism, and she's in a different age and stage than the first two ladies, is really in terms of she's giving it everything right now, and she's also investing in other companies. So she's not only investing in her own business, but she's in taking a really great perspective of investing and being a great founder who's investing in other founders. And then the last one here is Michelle Reeves. And what I loved about this conversation with Michelle was really around how she's built her wealth through really hedging her bets. Michelle started off doing some real estate. She then was able to draw down on that capital in real estate to invest in her first business, right? She then put money back into the savings account, back into markets, drew down on it again to start her second business. And so, what I love about her story is sort of the idea that money is there for you to tap into. Sometimes we look at a savings account or money in a brokerage account and we're like, this is rainy day money, right? But it's also there for us to tap into strategically. And so, what I love about her story is sort of putting money back in the pot, taking money out of the pot, right? And sort of the relationship between how we look at investing in our businesses and investing in our future. All right, guys. So my plug here for the Women in Wealth Catalyst Summit. So this is going to be happening next year. So March 27th in San Francisco, happening in May in New York City. And what I'm so excited about from this perspective is I actually have yet to be able to find a summit or a conference that really covers all the different ways of building wealth. These days, the topic of money, of women in venture, is really sexy. It's everywhere. I'm also a big fan of Show Her the Money and sort of all of the other exciting things that are happening in the realm of women in venture. But I also think it's important to understand that venture is a 7 to 10 year potential timeline horizon. And fund managers do well with their funds because they diversified into 10 companies, hoping that one will do very well. So, venture plays a very important role in driving innovation and growth in the world. And it's also one component of many other different ways in which we need to look at building our wealth. And so, at this conference, we'll be talking about building real estate, looking at entrepreneurship through acquisition. So that is something we didn't really talk about today, but this idea that you have to build a business from scratch in order to be a successful entrepreneur is simply not the case. There are many opportunities to be an entrepreneur through acquisition. And then also things like, the FIRE movement, right? Financial independence, retire early. We don't talk a lot about this. So much of our culture is around the hustle. But if we were to ask ourselves, how can our businesses serve us, right, rather than how can we serve our businesses? I think what we might be able to find here are that there are other opportunities to expand not only what our lifestyles can look like, but also where our sources of income can look like. So women.win is the URL. I'm so excited that I was able to grab that. I feel like a super badass for grabbing that before no one else did. And here we are at the end of our presentation, right around the time for questions and sort of an opportunity to chat more about money, because I think it is such an important conversation.
Indeed, it is.
So
Okay.
many good points.
Ta-da, ladies. Here we go. It's I think what's so exciting, or at least what I have found in my journey over these last, let's say, 7 years or so, is that money was something that I always thought was just going to kind of work itself out. That if I kept doing the thing that I loved, then like somehow things would just magically, magically work out. And what I realized for myself was that I need to follow my curiosity, and curiosity in business, but also curiosity with like money and getting curious with this thing that is so pervasive in our lives. It is it's one of those things where, we will talk about things like, love or career, and sort of these things that kind of follow us around our journeys. But yet money, which is something that is so emotionally tied to who we are from the moment we're born, we're fed these stories until the moment we die, where it's, are we passing on any resources to our children? Are we donating money to the causes that we love? This concept of money in our lives, I feel, is so personal and pervasive.
Mm. God, it really is. And it's also just true that women don't typically have these conversations nearly as much as we should be. It's just we talk forever about the men in our lives, and we talk about relationships in our lives, but we don't necessarily connect the dots, when it comes to money, like the relationship that we have with money. I mean, which is something that you just said so clearly. So I do think it is a really big gaping hole. And it also, one of the things I loved early on in my legal career, being a general counsel, and I started out at a big law firm. And so there's a lot of stability. Now, right, I mean, like in general, to your point earlier, like having a corporate career rarely makes you millions. It could if you are one of the anointed few that are very, very successful in big law, right? That really could make you a fortune. But very few people, for various reasons, will ever end up having that career. And certainly for me, it was just not a path that I wanted to pursue. And so, but I remember when I made that leap and I went to startups, I went from a big white shoe law firm, corporate security, lockstep pay, to, okay, scaling startups, totally uncertain, pay all over the map. And I remember feeling really terrified by the kind of, losing the security. And then I talked to this one recruiter who made such a good point. It was just like, look, the only constant is change. Everything is dynamic. These big corporations, they're constricting, they're retracting, they're laying people off. There is no certainty anymore in these big corporations, especially when it comes to, like, if you're not proactive and planning for your own retirement, versus you go to these startups, and because things are always changing, they're always imploding and growing, and there's all this, it's a dynamic landscape, so there's way more opportunities if you're strategic and paying attention to all the things you mentioned in this talk, to to actually like ride the currents and the waves and like create much more wealth for yourself that way.
Yes, and I think that this idea of exploring what these things are, like I think that even when it comes to, this conversation wasn't around kind of the corporate world, but like this, the power of negotiations of your contracts and the power of understanding, what stock options really mean, right?
Right.
Like, I think that sometimes it's like we don't understand what it really means. Like these things, we hear buzzwords and we think that like this is a good thing, and then we want to believe things that maybe we know in our hearts aren't true. So I remember I took a job at a startup before I started my own business, and I was really excited. I was like, "Oh, I'm gonna get options, and all this stuff is really exciting." And I talked to a friend of mine, and he was like, "Well, what do you think the probability is of this business actually succeeding?" And I said, "Huh, I hadn't thought about that. I thought it was like very exciting to have the job and very exciting to be a part of this momentum and energy." And I was really quickly schooled on the fact that, using my noggin, like, how do I evaluate this as a real opportunity? And so I ended up negotiating more salary and less options, and I'm happy that I did, because it ended up being the best choice for me at that time. Now, someone else might have the same opportunity and go, "You know what, this company really does have a lot of promise and value, and I'm gonna take more options and less salary because I see that there's a huge opportunity here for an exit." And so I think that, when it comes to dancing in territories where you may not understand the whole pie, right? It's why like networks and your community and people around you become so important, because you need outside perspective, especially when something is so um pertinent to, let's say, your day-to-day living, right? Like, you're thinking about it, I'm thinking about it from the perspective of my paycheck, right? But my
Mhm.
friend is thinking about it from the perspective of, is this really a good deal given sort of the dynamics of this company and where the market is heading, and all of these other things.
Yeah. Yeah. Well, and also, diversification, like you made a couple of really great points about that. But even just related to, this conversation we're just having, like sometimes it's better to negotiate for the salary and not the equity. But then especially if you're working for multiple companies, different startups experiencing different ways to earn equity, whatever, you learn a lot along that journey. And if you come out on the other side with, real diversity in terms of what you have done, like maybe sometimes you're getting more salary and then you're investing that in the stock market. Other times you are taking stock options or taking shares. And then, it only time is the powerful, like, you take 10 years or 15 years and you look back, and if you did that 10 years ago, you start to really see the benefits of that, taking that diverse approach.
Totally. I was talking to, I interviewed this great, fabulous woman, Susan McPherson, yesterday, and she's about to turn 60, right? And it was so interesting because, the community of women and people who been talking to recently are in their 60s to 70s. And, it's interesting to start to see and understand like what the impact of what we can do today and how that really, I mean, being 70 is not like, I mean, it's far away, but it's also not, right? And so I think that there's an opportunity here. I like to call it getting real, right? Where you're like, okay, this money today actually has the ability, to yield X, right? What are the highs and lows of where my money, time, and energy is being spent? And I think that so many women I've spoken to have done very well with equity, and it's because they've taken equity at every startup that they've advised. And some of it panned out really well, some of it didn't, but all in all, was it worth it? Yes, And so I think thinking about the right mix for you, right? I think at the end of the day, it's like, what are the money stories around yourself that get to be healed? What are the questions that you need to have answered? Meaning, how much money do I need to have access to because I need to feel safe? Like that's not something that a lot of people acknowledge, but we can actually see it as a result based on their investing or lack of investing behavior. And the question is, do you have enough to be able to not take any risk? Like is not taking risk an option? And for me, as I looked at my business and my financial situation, I said, you know what? I thought being an entrepreneur was the risky part. Actually, like the real risk here is if I don't find diversified ways to invest my money, the real risk here is that I won't end up with anything. And
Yeah.
so that was what really drove me, which is like owning my business and, like how else, how else do I make this work?
I love that. And I love that's so important. The point you made about venture funds and LPs, right? We hear so often that we're interested in being angel investors, but we're risk averse. And so that first or second or third investment, direct investment into a startup is really, really scary. But we don't know about what it means to be an LP. Like it's so important that we talk about it and that we kind of educate women on there are ways to diversify your portfolio within a certain silo that you're looking at.
Totally. And really it's like that. So my dream, you guys, is that we all get really filthy rich and change the world. And that we do that through, yes, creating our businesses and putting our vision into the world. And then also like putting the capital to work for us in other ways,
Yes.
such that like whether or not our businesses reach the heights that we want or they don't, we're all still going to really thrive, and that I think is important.
And it's
Well,
what we talk about a lot, right? Like the more we invest, we're going to have impact in what we invest in. And it's just going to create a more equitable society because we are more likely to be impact investors.
yeah. Well, and another thing I keep thinking about is education. How like we've been obviously thinking about our annual summit a lot, and the story we're telling there, which is comes down to what can we do today to create equity tomorrow, and it's not coincidence that we're sort of ending the arc of that story, really focusing on education and this power, especially with technology. Can that, with AI, can this really democratize access to information? And you're stressing like how important it is that we actually get real, that we take advantage of the tools to know what these things are, so that it's an educated risk that we take. Like, women are risk averse. That doesn't mean we won't take risks. We just like to really understand why we're taking the risk. And so with, technology, education, wouldn't it be great if so many more of us are empowered to take these risks? Because I do like, when I look at my own life and I take a step back, I think the riskiest things I've done, professionally or investing or whatever, I do think will yield the biggest results, as compared to the least risky things.
I mean, trading time for money is very rarely gonna be the thing, It's like gotta make our money work hard for us, ladies.
Word.
Well, this has been super valuable. You made so many great points, and I think I'm thinking a lot about my own strategies as well.
Yes.
It's I was telling someone the other day that, this kind of conversation couldn't have happened 5 years ago. Like, it's like very much of this moment we're living in, right? This moment where like we have, you know, maturation in our age, like all of the rules against women investing and getting credit cards and loans and like all this stuff. It's like we're finally now at an age where it's like, hey, we can talk about this because we've had a lot of experience around it now. And there's a lot of opportunity to share because we've been able to now spend the time being in it. And so the resources are there and the opportunities are there. And all we need to do is sort of raise our hand and say, like, I want to know more.
So good.
Thanks, ladies.
Thank you for helping the fourth effect know more. We really
You're
appreciate it.